If you're running a cyclical company, your goal is to become less cyclical, less hostage to the strength or weakness of the broader economy. If you can smooth out your earnings, if you can disentangle your sales from the business cycle, well, you know what? Then you have a winner. As long as your numbers remain episodic and beholden to the fates, you're going to have a boom and bust cycle. When there's a bust, cyclicals get destroyed. Take today. We had multiple examples of what happens when you get it right and when you get it wrong. One of today's biggest winners, United Parcel Service, UPS. At one time or another, this great American company has been hurt by economic weakness, both domestically and overseas. Today showed you what happens when United Parcel managed to smooth things out. You get a much better story, and the stock exploded higher. It was up nearly 8%. UPS is no longer an episodic cyclical at the mercy of the business cycle. That's what we saw this morning. And when I spoke to the CEO, I couldn't agree. Boom, they did it. It's got a secular growth story that's levered to e-commerce, and that makes for a much better stock. Wall Street always pays more for a secular grower than a cyclical one. Texas Instruments, TXN, is in a similar situation. Historically, it's been very cyclical, even for a semiconductor company. Despite the stock's 7% rally today, you should know that the quarter Texas Instruments reported today was actually pretty ugly in absolute terms. Their sales declined across a broad slate of businesses, everything from personal devices to autos to industrial cell phones, cell phones. But get this. The company's actual bottom line was much better than expected. Why? Because even though the economic backdrop was extraordinarily weak, Texas Instruments managed to smooth things out and deliver fantastic earnings per share. The company, long the most cyclical of the semis, has now become a secular grower. It's been rewarded with a much higher valuation.
All aboard!
On the other hand, companies that live by the business cycle, they die by the business cycle. If you don't try to change, sooner or later you do get slammed. So take Caterpillar. This morning when Cat reported, I expected them to have an okay quarter, not great, but better than the broader economy. I had Cat pegged as a cyclical that was trying to turn into a more secular grower. I was wrong, and the company disappointed. Now, management did keep their full-year guidance intact. Some of the shortfall had to do with a recently announced restructuring, which caused a big hit to earnings this quarter, even as I think it will eventually pay off. Cat bought back a ton of stock, too, which is what I like to see from consistent growers. But at the same time, it had higher raw costs, had $500 million in inventory. That's way too much. It's way too much supply. At the end of the day, Caterpillar turned out to be too beholden to the oil and gas cycle. Now, we know from Halliburton, which is cutting back its workforce in the Permian Basin, that drilling is deeply cyclical. I do hope that Cat CEO Jim Umpleby, whom I like very much and was a guest on the show, will start under-promising and over-delivering. In some ways, I think he did the opposite. Still, I think it's a buy if it pulls back below 130. I told members of the ActionAlertsPlus.com club that, because I believe Jim can turn things around and make it so it's more of a secular grower. But now I only feel comfortable saying that because it looks like the Fed's going to cut interest rates. Believe me, this process of transformation is not easy. And I feel bad for Umpleby, but because I know how hard it is. For instance, Honeywell did it, but it took not one but two CEOs to fully transition from a cyclical to a much more of a secular grower. United Technologies plans to spin off its most cyclical businesses when it splits up into three separate companies: aerospace, elevators, climate controls. That's one reason why they're trying to buy Raytheon, to combine it with the aerospace division, again, to become less cyclical. The rails are certainly trying to have secular growth through their precision tactics. It worked for Union Pacific, but it didn't work for CSX, though. And I don't feel great about Norfolk Southern, which got slammed after it reported today. I'd love for them to come on the show. James Squire's doing a great job. Now, watch this process. When the cyclicals can pull it off, it's like the transformation from an ugly caterpillar into a beautiful butterfly. And if they fail, well, that's just a plain old caterpillar. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.